Well, I don't know what you make of the revelations by Boeing, but that is serious indeed. Well, let's leave that for now and move on to tonight's stories. Government is expected to raise some 12.1 billion cedis in bonds and treasury bills for the second quarter of the year. This was captured in its securities issuance calendar from April to June this year. But what would be the impact of this on the country's rising debt stock? George Rafi has more in this report.
Based on the calendar, the Finance Ministry will be trying to raise a chunk of these funds from its 91 to 364 days treasury bills. Together, it will be raising almost 8 billion Ghana cedis through these short-dated bonds. For the long-dated papers, a little over 4 billion Ghana cedis will be raised, which includes a 3, 5-year and 6-year bond. When you go through the calendar, one development which analysts may describe as interesting is the issuance of a 10-year bond to raise 800 million Ghana cedis and a 15-year paper for 450 million Ghana cedis. This should mean that government is trying to lengthen the time that it pays these debts, a development that could give it some space with its fund management. The ministry in the calendar says out of the amount being raised, 11.5 billion Ghana cedis will deal with rollover maturities, with just 566 million cedis being the only fresh cash raised. But for many, the concern will be at what cost is government trying to raise these funds. That is the expected interest that it will pay on these papers, a development that would surely impact on the debt stock. It stands at 173 billion Ghana cedis as of December 2018. The 2019 budget, government is planning to set aside some 18.6 billion Ghana cedis as interest payments. Now, this is the second biggest spending item in the 2019 budget, apart from compensation for public sector workers. Now, this is even higher than the amount that government is setting aside when it comes to capital expenditure.
All right, so government has laid out its borrowing schedule for the second quarter in its issuance calendar. But who are government's biggest lenders and what are the implications for such? Joining us in studio is Joy Business researcher and analyst Philip Nanfori. He's going to walk us through the numbers and make it simple for understanding, as he always does. Thanks for your time tonight, Philip. So explain to us what the issuance calendar means.
Okay, so essentially government will lay out its borrowing plans in a quarterly timeline. So every quarter it comes out with this issuance calendar. And what we have right now is the second quarter issuance calendar. So for April to June, how much government intends to borrow from the markets. That's from you and I and then other investors. So what it tells us is, for example, they might be borrowing to roll over maturity. So that's debt that's already in the system. And then they might also take on fresh issuance. So there's always the distinction between what is already in the system as borrowed money and what they are going to issue on a fresh level or on a fresh issuance. So that's clearly what the issuance calendar seeks out to do.
So when government borrows, who are the biggest lenders?
Okay, so we put this table together, and as you can look at it on the screen, it shows you the various lenders. That's who government borrows from the most. And this data is from the Central Securities Depository and is as at April 2019. So if you look at the top, we arrange them in ascending order. So from the lowest lender in terms of the stock to the highest. And you look at SNIT, about 91 million Ghana cedis. And it goes all the way to foreign investors. Look at how much foreign investors have in terms of, and this is just government of Ghana securities. So that's 182, 91 day, 364, 1 year note, 2 year notes, and then the bonds. I didn't add the private sector debt. But if you look at it, foreign investors are very high when they're playing in our markets. You see about 27 billion Ghana cedis worth of debt bought by foreign investors.
Okay, so what does this imply then?
Well, it just shows you where the appetite is and who has the appetite for our debt. You see that it's between the commercial banks and the foreign investors. You would expect that people like, for example, insurance companies, life insurance companies will be doing heavily. They do a bit, but as compared to foreign investors and commercial banks, you can see that commercial banks about 16.9 billion and foreign investors 27.4 billion.
Is that bad in itself?
If you listen to the government's arguments, the governor of the Bank of Ghana, Dr. Ernest Addison, when he was speaking at the Graphic Stanbic Breakfast meeting, he mentioned the fact that we are very exposed to foreign investors in our markets. And when they are exiting, it has its own implications. So if you look at the size of just Government of Ghana securities, and you see that foreign investors are holding 27 billion, and imagine they want to exit, and you have to convert this to foreign currency, you can imagine the implications to have on our domestic economy when it comes to the CD and all that. So just a picture of who is lending to government and who holds the most.
Breaking it down for us, as always, thank you very much indeed, Philip Namfuri. Well, let's move on now. And, well, partners for the construction of affordable housing, is known as the Kufado flats, have presented a model for the first 100,000 houses to government. This follows the agreement of a partnership between the German engineering firm Cleaver House, CH Africa Group and government to execute the project in all 275 constituencies of the country. Minister of Works and Housing Samuel Atachia explains that the Ministry of Finance is working to get some financial service providers to support with mortgage terms.
The Ekufado Affordable Housing Unit is aimed at reducing the country's housing deficit. One of the partners, CH Africa, will commence rolling out of 10 factories to manufacture building components across the various regions of the country for all the 100,000 housing units. According to the Minister of Works and Housing, Samuel Atachia, the affordability of the houses is being worked on by the Ministry of Finance, as well as some banks through a mortgage concept.
The fundamental issue is that would you create an enabling environment for the people in the low-income brackets to go and own the houses? This is what has engaged the imagination and attention of the president, and is moving the finance minister and my good self to create an enabling environment for the mortgage thing. So granted, it is said that this house is going to cost, even $15,000 or let's say $10,000. How many Ghanaians can put their hands in their pocket or, issue a check for it to be paid? But if you created a mortgage arrangement, then they can own the houses within a stretch of time, say 15 years, through what we call the instrumental discharges, which they have to enter into with banks. So this is how you define affordability.
On his part, Chief Executive of Cleaver House Africa, Julius Kofi Menu, disclosed that the project, expected to be completed in 6 years, will create more than 100,000 jobs.
Straighten the technology and the designs for the Nana Addo affordable housing projects, because we're one of the contractors and we're contracted to develop 100,000 units within a space of, to deliver this within a space of about 6 years. So this is the technology that is going to deliver the designs that were shown. We estimate that with this 100,000 project, we could create up to about 100,000 direct employment.
The Cleaver House technology is one of the modern technologies globally adopted to boost Ghana's housing sector.
You're watching Business Live. Now, the Institute of Directors Ghana has called on management of companies to be cautious about the way they handle issues when it comes to good corporate governance. Now, the call comes at a time that there is a standoff between the management of First Atlantic Bank and some 100 SAC staff who may be heading to the National Labour Commission soon if current negotiations fail. Now, ahead of the 2019 International Corporate Governance Conference, which is on the theme Enhancing and Sustaining Good Corporate Governance, the role of stakeholders, President of the Institute of Directors Ghana joins us via Skype with some perspective to all of this. You can see him right behind me. Thanks for your time tonight. Let's, first of all, we could talk about the issues to do with First Atlantic Bank and the issues of corporate governance that you raise. How is that linked to the issues that they are facing right now with the staff?
To be honest, I've not been following the issues very critically. I've been very busy on a couple of things. But the key issue about staff and management relationship is about policies, conditions of service. Now, good corporate governance demands that we have principles which should be informing decisions you make on a day-to-day basis. If it comes to issues about the human resource of every organization must be guided by a certain specific policies. Now, if there is a misunderstanding those same policies or otherwise the company codes should recommend the appropriate resolution mechanisms. If those things are absent, then there is a problem with good corporate governance in the organization. So I believe that somehow the parties involved in this must sit and talk and respect the principles of good corporate governance. Indeed, misunderstandings arise in one way or the other as far as the human endeavor is concerned. But when all of these arise, what works is the policies. So good corporate governance will demand clarity in our policies and making sure all parties in the chain abide by it. And this is where it's important that we all respect the principles and practices of good corporate governance. Not talking about that, it's also about the...
Go on.
Yes, so I was going to mention again that good corporate governance demands that we anchor our behaviors on certain fundamental principles. These fundamental principles are transparency, accountability, integrity, and fairness. So I would want to urge the parties to be fair in all their deliberations as far as this impasse is concerned.
And I guess that's the reason why the spotlight is on corporate governance, this international conference that you're about to hold. Tell us a bit more about what is going to take place tomorrow, what speakers we should expect, and what do you expect to be the impact on the business leaders that take part in this conference?
So generally, we're going to be discussing the critical principles of good corporate governance as pertains in Ghana and Africa as a whole. We have about 19 delegates from the African Corporate Governance Network congregating in Ghana for this conference tomorrow. Key among the issues we'll be discussing is about the principles of good corporate governance, which has to do with the board behavior, which has to do with some critical aspects of governance, succession planning, employment issues, stakeholder relationship issues, issues bordering on ethical culture, effective leadership, good performance, effective controls, and legitimacy. It's our hope that with the stakeholders attending this forum, we will live well informed as a country and as stakeholders in the public and private sectors, knowing that the responsibility of good corporate governance is in our hands, and it takes our attitude to get things running as far as our businesses are concerned. The bottom line is that we would want to see good results in all aspects of our socioeconomic development.
All right, thanks very much indeed. You heard the director or the president of the Institute of Directors Ghana, Roxanne Dogwagada, telling us about the Corporate Governance Conference, which is taking place at Kempinski tomorrow at 7 a.m. and shedding more light on issues to do with corporate governance and, of course, the issues with the redundancy at First Atlantic Bank. You're watching Business Live. We want to move on tonight, and Asantehene Otumfuo Asseyetu II has called on investors to support Ghana's private sector to engage in more manufacturing than importing. He believes this will enhance exports and strengthen the economy, especially the local currency. The Asantehene was speaking at a reception for investors who took part in the World to Meet Ghana Investor Forum, I beg your pardon, and dinner ball in Kumasi. Prince Apia was there in our reports.
Days, hundreds of investors have been meeting in Kumasi in a fashion to honor the Asantehene Otumfuo Asseyetu II of his 20 years anniversary celebrations. The main motive is to drive home foreign direct investment to the country Ghana. Asantehene Otumfuo Asseyetu II reiterated the need for Ghana to refocus our attention to manufacturing to address the huge loads of imports.
We have also been expanding and modernizing our traditional markets. The problem, though, is that the malls and virtually all our shops and markets are filled almost entirely with imported goods. job. This is the underlying cause of the constant pressure on the value of our city. As more and more shop owners seek foreign exchange to import goods for their shops. To policymakers, this is a massive problem. But to the business mind, the real entrepreneur, this is an opportunity. What greater opportunity can there be for manufacturing industry to fill this vast market? Not to talk about opportunities for exports. We have to ask why, in spite of the vast opportunities, the industrial landscape in Ghana is so barren.
One of the many associations that attended the Investors Forum was the Ghana National Chamber of Commerce and Industry. President Nana Dr. Apieje Dankawoso I says it is very critical to use culture to drive economic growth and attract investors into the country.
First of all, there are so many ways that you can use culture to do. Use culture for peace, culture for industry, culture for unity, culture for so many other things. And this time around, they saw it quite expedient. And you know, Ashanti people are very, very industrious when it comes to business. So he saw the need to, you know, crave that opportunity for investors to see how best they can partner people in commerce.
Meanwhile, the second deputy governor of the Bank of Ghana, LC Ado Awoji, reviewed the new Payment Systems and Services Act provides opportunity for investors to operate successfully in the country.
The recently enacted Payment System and Services Act also provides opportunities for investors to really get involved to provide innovations in financial services. This new act will make our payment systems more efficient, and this is more in tune with the changing nature of business and the way in which business is conducted across industries. We also are committed to ensuring that this new legislation opens up investment opportunities for investors, particularly in the fintech space.
The forum also provided avenue for networking among the business community here and abroad. Prince Apia reporting.
Well, let's turn to one of our top stories tonight. Finance Minister Ken Ofori-Atta has reassured government will create the required jobs to aid the country's economic growth. The minister gave the assurance at the launch of the IMF Regional Economic Outlook report. Georgia Afe has more.
The finance minister's assurance follows concerns that the 8.8% would come without the required jobs being created. This was after the IMF projected that the 8.8% growth would be highest in Africa. Speaking at the launch of the IMF Regional Economic Outlook, Mr. Ofori-Atta said it's in the interest of government to ensure that these jobs are created to support the projected growth.
It's not going to be easy going forward, and we should all be ready to ensure that we do not return to this program. But more importantly, you know, the loss that we incur, the social injustice, the poverty, which really is unnecessary given the resources and capacity we have as a nation. Because we have what we call demographic dividend, but it could be a demographic disaster. We have a youthful population, 70% of us are under 34, whilst 53% are below the age of 24. We must transform the economy, we must provide jobs. So jobs must be an overarching theme in all that we do to achieve them.
Speaking at the same program, the First Deputy Governor, Dr. Maxwell Opoku-Afari, also assured that his outfit is fast-tracking ongoing reforms to firmly stabilize the financial sector.
There is also in the fiscal rule the requirement that the primary balance should be in surplus. When the primary balance is in surplus, what that means is that you are not adding to debt, you are actually taking out of debt. So for us to be able to maintain the primary balance in surplus over the medium term is actually reducing debt and bringing debt on a downward trajectory. So these two are very critical to ensuring that our debt dynamics remain on a downward trajectory going forward.
Deputy Minister of Trade and Industry Carlos Ahinkra also talked about government's preparedness to ensure that the country benefits fully from the Continental Free Trade Agreement. The launch of the IMF Economic Outlook report brought together former ministers, academia, think tanks and the country development partners. The report also warned that the country is still at high risk of debt distress. George Yaffe's report for Joy Business.
In other news tonight, energy expert Ishmael Jekumhene says both parties to the debate on whether Ghana will be shortchanged by the current AGM ACA petroleum agreement must be dispassionate about their stance. For now, both the minority and government have taken entrenched positions on the agreement. Last Friday, Parliament directed the Minister of Energy to renegotiate government's amended agreement with AGM and ACA Energy for oil exploration in the Deep South West Tano oil block. Sharing his thoughts on the marketplace, Ishmael Jekumhene said petroleum exploration is a huge capital-intensive venture for which issues of cost cannot be overemphasized.
I think there is cause for some issues to be flagged, except that we always end up turning the whole issue into politics and we lose the essence of the key issues that are at stake. Truth of the matter is that yes, we had some stake in the field in the block in question, and it was part of a strategy, and I believe it's still part of a strategy for GNPC to increase their interest and stake in most of these fields that are going to be developed in the future. GNPC had a strategic direct focus of becoming a world-class operator within 15 years. Okay, so what they were going to do was to take active role in exploration and also development of the field. So if you look at some of this agreement is not the only one. I think in another petroleum agreement that we have with Kamak Energy, Exploroco's share is actually around 25%. So it was a strategic decision that was taken a couple of years ago, and Exploroco was actually incorporated in 2012. So that's the context and the background. But the other side of the story that I believe maybe nobody is telling us is the fact that the more stake you have in the field, the more your financial obligation and your commitment is. And at least we have history to guide us. Jubilee, from the discovery till they started producing, about $4.2 billion was spent. I think for the Sankofa field is running into $7 billion or so US dollars. So if our current holding in this field, it's as previously is around 43%, what that means is that we will always be required to look for a lot of money and not just developing a field, but this time around we're going to go into exploration. And the areas where we're looking at are also deep, ultra deep water, and it's extremely expensive.
So lastly, before you go, do you think that the minority have considered, that aspect of the risk factor where, we could hit a dry hole if we go, increase our stakes and do the exploration ourselves instead of, and losing that so much money instead of giving to another operator?
I don't think so. I think if you listen to the benefits, they're only talking about the benefit. I think nobody is doing that. They are simply probably like they will multiply some rate by potential discovery and total reserve and say this is how much. It will be interesting to see how they do that, but I don't think they've done that. But the other side to Emmanuel is that once you make a major discovery, those exploration costs, you don't lose them entirely.
And that's Business Live tonight. Thanks for watching. There's more news as always on our website, joybusinessnews.com. That'll be it. Thanks for watching. My name is Daryl Kwao. We're back same time tomorrow.